Hello and welcome to another episode of the People with Payments podcast. I am Nathan, founder of 𝗤𝗏𝗍, and today I'm joined by Piero Macari, founder and CEO of Kasssh. Now, as the name suggests, Kasssh is a business that digitizes cash payments to enable e-commerce businesses to cater to the diverse needs of today's consumers, unlocking the ability for those who prefer cash-based transactions to access the benefits of digital shopping. In this podcast, we dive into the background of Piero, both prior and during his journey as a founder, and we tackle that question around how Kasssh absolutely still has its place amongst the ever-evolving digital payments ecosystem. Piero, great to have you on the podcast. How are things?
Thanks for having us, Nathan. They're all well, and good afternoon to you.
Absolutely, fantastic. Well, look, really good to have you on here, and I guess for the benefits of the listeners to kick things off, it'll be great to get a little bit more of a background story of yourself. Of course, with almost 12 years at Mastercard and then launching your own business. But yeah, tell us about your background and what ultimately led you to founding Kasssh.
Sure. So many years ago, I actually started my career at a company called GE Capital, fantastic company, doing things called buy now, pay laters. And we were doing a lot of in-store finance credit. And that was up until 2008 time, when that small thing called the credit crunch came. And obviously a lot of shaking and moving around in the banking industry. And that's when I moved across and joined Mastercard. Was there for, as you said, just under 12 years. Loads of different roles there, from project management to sales to product management. And in my latter years there, I was fortunate enough to run their prepaid product business across the whole of Europe. And that's where my career shift began, from working from big banks and financial institutions to more fintech type companies, and within Europe with EMIs and payment institutes and those types of businesses. And that was the eye opener to the sort of technology change and what you can do with payments in the wonderful world of fintech. So candidly, around 2017, 18, I got tapped on the shoulder by a fintech to come and join them. So I had this massive dilemma on my hands, career-wise, whether, I was in a good company, things were going well, but then I had the opportunity to go and work for a fintech doing something a bit more racy in that area of payments. I actually didn't jump ship, but the sow was sown in my brain, and I knew I was on a path into doing something different. To which I did right in 2019. I took the risk. I left Mastercard, and then COVID came and actually blew up my whole plan A. So I started looking out the window, and if people remembered sort of the summer of 2020, the job market, as you probably know, Nathan, completely froze.
Absolutely.
So I left a good job, taking a risk. It all gone wrong, and then I started this thing called Kasssh, which, when I was looking after prepaid at Mastercard, I always used to see people loading cash onto prepaid products. Loads of inefficiencies, very expensive. And I thought, no, there must be a better way of doing this. And that's what we've launched back end of last year, is our Kasssh solution. Okay. So that's how I got it. There's lots of stops and starts before we got there, but that's sort of my background, my sort of career turn twist, and how I've ended up doing launching Kasssh.
And it's interesting that, as you say, it sometimes just takes that seed to be sown for you to think, okay, well, actually, this fast-paced, agile environment that is the fintech and the startup world, in comparison to, likes of Mastercard, who are amazing companies, right? There's no doubt about it. But of course, there's a lot of structure, a lot of processes already been established, and I think the impact you can have in those types of businesses compared to the fintech and the startup world is very different, right? And it's interesting, right? You mentioned you took the leap of faith just before the pandemic, which is, look, just a bit of bad luck, right? In terms of how that can work out. And when you look at the world as a whole, I mean, today is very different to what it was like 4 years ago when you kind of launched a business. And I appreciate you said there's a lot of stop and starting, but I guess how would you say that's affected the product evolving for Kasssh as a business, and really around those market conditions?
Yeah, so there's a few factors and forces that came in. So there's a lot of stopping and starting. So I started this in 2020, or the middle of 2020. But for about a year, I couldn't. We got it to a stage without funding, it wasn't going anywhere. So candidly, about the end of 21, I'd shelved it. I put it on the back burner. I was one of those statistics that failed. But I hadn't actually switched it off. I just kept it brewing in the background whilst I spent my time doing other things, a bit of contracting work, a bit of consulting. And then in basically there was a bit more interest with the cost of living crisis, and people then realizing, like you said, during COVID, everyone thought cash is dead, and everything's changing, and everyone swung one way, which the world was swinging a certain way. But in my opinion, and thankfully a few others, cash isn't going to die. And then the cost of living crisis, cash is a great budgeting tool used by millions. I'm not sure anyone listening to this, take out £100 and try and manage that as a budget, and then you can feel the pain of spending money, overspending. You're a lot more conscious, and for a lot of people in society, it's a very, very good budgeting tool. So so that basically, with those sort of market conditions sort of swinging one way during the peak of COVID to swing a bit of another way with the cost of living crisis, managed to raise a bit of investment. And then we launched, which was back end of 2022, so 18 months ago. And that's how we've managed to then build the product, get it launched, get up and running, and now starting to scale it. So that's, the product itself hasn't really alternated too much. I mean, we've done a few mini little pivots, as you'd expect any business. We had some great ideas of potentially building our own cash-in network, and then quickly realizing that that's not the smartest option, and a few other underlying product bits that we've changed and altered, but the underlying concept of what we're trying to achieve and do is fundamentally the same.
Okay. And look, I mean, you're coming up against a really competitive space, right? And when you look at, I guess, the consumer journey from your product perspective, so really what a customer would do is they would go to a website, and as they look to pay, they'd have an option there which is pay by cash, right? So they'd click that button. They would be given a QR code or a barcode to take into a local store which has a pay point, and that would then be scanned. They would make the payment in cash in the store, and that would automatically trigger the transaction being complete, right? So I guess when you look at that journey compared to using card or PayPal or pay by bank or other options that are available there, there is a kind of sense of a little bit of friction there that has to happen, because of course you have to physically go to a location to do this. So why is it that a consumer would use this method instead of an alternative payment method that's provided?
Yeah, no, it's a good question. So a couple of things. First, straight off the bat, we're not trying to compete or move people from cards back to cash. That's bad business. Our customers are e-com retailers. We want to give them access to incremental customers, and vice versa, give customers access to the digital economy. So if I go back and talk about the user experience a bit more, today, or the most common way, if you want to use cash online, you don't. You'll go to physical high street or physical stores. Or secondly, if you do want to pay online, you end up either having to find someone to give them money for them to pay online and doing it, so you can rely on someone else, which you could argue again isn't a great experience. Or you can go and load other accounts and cards, and this is what I used to see once upon a time at Mastercard and prepaid. You used to load money onto prepaid or bank account like type products, which again means you actually have to go out and physically load it. You as the end consumer have to then pay a handling fee, because you're loading, say, £100 on, you have to pay £100 plus X.
Yep.
And then you have to then go back to the product you wanted to buy online, if it's still available and the price hasn't changed, order it, and then go and then complete it. So you're right, that last leg, when the money's loaded onto the card, will be quicker, but the process behind all of that, it's a lot more expensive, it's a lot clunkier than what we believe we're delivering. And finally, it's that there's residual money left over. So if you want to buy something for £98 and you load £100 onto it and have to pay 102, 103, £104 handling fee, then it's cost you load. You've got some residual money left over that you're unlikely to use again, or you've got to go and top up again. And, you know, if you look at the target market we're going after, those budgeting consumers or those a bit wary of the internet, this is where the cash element of it becomes sort of familiar and trustworthy.
Yeah.
So the user experience today for those that want to use cash isn't great. We think we've really made the user experience as slick as possible. It is not instantaneous, and also got to remember some of the people who use cash, they don't mind a bit of friction. So you're assuming everyone doesn't want frictionless. Everyone wants frictionless payments, but not everyone does. You know, they want a bit of recognition that something's happening.
And I guess it's going back to that point in the sense that you're not trying to get people to stop making payments via card or digital channels, that you are just, I guess this is more of a payment option, right? It's giving people options. So if there is consumers that do not want to use card and they prefer cashback transactions, that there is the option for them to do that in a seamless way.
It's payment choice. If you know, you talk to any payment person with grey hairs like mine, they'll talk about, well, it's fundamentally about choice. The consumers will choose what they want to pay. And the more choice you have, as a business selling products or services, the better it is, the more open you are to a wider customer base.
And to flip it then on the other side, so really you've got two people you're selling to a certain degree, right? You're selling to the consumer to showcase, you know, the value and the safety that this payment option will ultimately provide them. You're also having to sell this to a merchant. So exactly the same question I asked in regards to the consumers, but again, why would a merchant then add this as an option? And how does it work from a commercial perspective for those?
Yeah, so we're B2B2C. So you are right. Our actual customer is an e-com retailer. They're the ones ultimately who we're serving, and we'll come up to commercials in a minute. They're the ones that are paying the fees. But the value proposition is how I tell people is pretty simple. Mr. or Mrs. e-com retailer, you have 100 customers today. By adding a cash payment option, you have 105 tomorrow, or 110, or 100 and whatever the X is for their particular vertical of cash users. So, as I say, we won't cannibalize cards. So, you know, one could argue credit cards and buy now, pay laters. You've got that sort of conjoint circle of where there's a bit of overlap between which credit product an end user would end up utilizing. But we're incremental. You go into a shop today on the high street, you can pay in card and different payment methods and cash, as my uncle said, but there's no cash payment option on a checkout on a website in the UK. And they're right. You see in other markets, Brazil, Mexico, 𝗏𝗏𝗏, or OXXO do sort of similar things to what we're doing, but there's nothing in the UK around how we're doing it. So yeah, that's our proposition for e-com retailers. We'll give you access to incremental customers. Ultimately, no one really, well, I'm a fan of working with e-com retailers, communicating to their target market.
Yeah.
Rather than doing sort of above the line activities directly ourselves to the consumers. And our commercials are simple. There's no setup fees, no monthly minimums. We just pay commission on sale. So if there's a sale using cash, then there's a few pennies coming to us for that transaction. And that helps pay the other sort of downstream functionalities like the acceptance locations, where we're working with PayPoint and a few others, like our wonderful card provider, 𝗏𝗏𝗏, and a few others.
Yeah, fantastic. So really there was very little risk. Well, there's no risk to the merchants to have this on their checkouts, right?
This is I'm glad you said that, and it's not something we even scripted, to be honest, because this is the music to my ears when I'm talking to e-com retailers, is the ones when they go, oh, this is a bit of a no-brainer. And I'm like, oh, that's great. That's exactly how we're trying to set this up. It's we put our money where our mouth is. You know, we both win together. And if we're not delivering, then you're not paying us anything.
Absolutely. And look, obviously there are some stats that come out in the UK finance report back in September 23, I think it was, which was cash payments across the UK are on the rise, and this was the first increase in over a decade. I think the increase was 7%. That went to 6.4 billion payments in the UK were made via cash. So, I mean, this is probably music to your ears as well, those kind of stats coming through on these types of reports. But, ultimately, there's got to be a reason for that. And we've already spoke about budgeting. And I guess that's also one of maybe the demographics that would use your type of platform, are those that do like to budget and do not even maybe like to, but need to budget more effectively. But there's got to be other kind of types of demographics and consumers in there to kind of see that increase, so drastic in the first time over a decade. So what's your thoughts on that stat, and what are your thoughts on why we're seeing an increase after such a long time?
Yeah, so I mean, it's like I said earlier, back in 2020 and early 21, everyone would go like, cash is dead, and this point, and I'm going, well, I just don't think it's going to die. I don't think it's going to be dead in 3 years, like everyone's predicting. And I guess this is one of the reasons I said this up. It's just to say, look, it's not dying. There needs to be a decent service, as the world has gone more digital commerce. But digital commerce and you can still use cash in digital commerce, and that's what we're trying to achieve. So no surprise, a lot of that, not a lot of it, some of that is a tail end of the exit of COVID, the COVID era. I think the British Retail Consortium in December also last year said 19%, so 1 in 5 of all retail transactions have gone up and are now in cash. So that doesn't really surprise me. It's kind of, I thought something like this would happen. I agree, when it's not going to go back to as it was 5-10 years ago. But if the same UK finance report that you're referring to, that their language has started changing from, we're increasingly going to a cashless society, to saying, well, cash is down, but it's still a significant part of our economy, and it will be, as their latest predictions, it's still going to be part of their economy. So that's so surprises. The findings didn't really surprise me. Let's see what's happened over the next few years. But I think you're going to see that stabilization of cash is what you'll see in the numbers. In terms of the segments, budgeting sort of the big segment, but there's also, as we talked about earlier, digital commerce. There's the fear of shopping online. Mm-hmm. So put your bank card online. What if you get defrauded? There's lots of implications for if your bank card details get stolen. And again, maybe sort of slightly lower income people in society, where they're reliant on a bank account. If something were to freeze on that bank account, or an investigation was going on, they don't potentially have a credit card or a credit line they can lean into for a few weeks whilst that gets sorted. So paying the rent at the end of the week obviously becomes critical. So and the news is flooded with fraud going on, digital payment fraud, whether it's card or bank transfers and similar faster payment type payment products. That there is quite rightly a bit of wariness going on in the markets from consumers on this. So that's another segment. People just supporting cash. I mean, I don't know what your views are. I don't think many people actually want to see cash go away, even if they're heavy card users.
I use cash myself as well. Obviously, I have cards. I'm very happy to use digital channels, but I do like to have a bit of cash in my wallet to walk out the house with.
And there are many people, who actually want to support cash. A bit of the anti-Big Brother brigade. I was just talking to someone yesterday, and they're talking about, I don't like really using my debit card because the bank can see where I'm spending stuff, and if I spent something on gambling was their example, then the bank systems are flagging in the background, not to say that this person might be a bit of a gambler, high risk taker. Don't know how true that is, but that's the perception. So there's a number of people out there who are, quite wary of Big Brother and data and that sort of anonymity of cash, in a legitimate way is still valid. And yeah, so those are sort of 3 segments, or a few others as well. But budgeting, the anonymity, civil liberty, and the sort of the worry about online fraud are a couple of the main segments of cash users that we see.
Nice. Okay, fantastic. And I guess there's always those times where, you need to buy your partner a nice birthday present and you don't want them to see where you bought it from, those kind of things. So
Exactly.
especially if it's anything like my wife, she's quite nosy. She likes to have a look through the bank statements and see what I've potentially got her.
There's so much money in there. She's counting the.
Oh yeah, that'd be nice, wouldn't it? She keeps draining it, as do my 2 kids. Nice. Okay. And look, this isn't necessarily a question, but I guess more of a statement. And what I really like about what you guys are doing is it kind of really hits home around that financial inclusivity piece, because I think when people talk about financial inclusivity, and it is a very hot topic in the market right now in the payments ecosystem, people are very quick to jump on the fact that, okay, it's things like cross-border payments and how we're enabling kind of companies to trade internationally, and these types of subjects. And people don't necessarily always go to those people that are budgeting and need different accesses to be able to go to the benefits of online shopping, because it's 9 times out of 10 slightly cheaper than going to a retail and high street store and all these kind of things. So I think just being able to provide that financial inclusivity is really important, and a very, very kind of key function to this platform.
Absolutely. Look, it's choice. Give choice. Don't be restrictive. No one wants to see restrictions. So that's exactly where we're at.
Absolutely. And so look, going beyond the business, let's talk about you. It's everyone's favorite thing to do is to talk about themselves, isn't it?
Okay.
But look, you've had a great journey, as was mentioned, and I guess during your time working with Kasssh, what have you really been able to discover about yourself, having come from an employee to now a founder? And if you were to be able to rewind the clock, is there a certain scenario or a certain time where you thought you might have done something differently?
Yeah, good question. That last point, I should have done it earlier. I should have done what I'm doing now earlier. But it's hard. I was talking to another sort of ex-colleague last week, and we're talking about risk. So it's your appetite to risk.
Yeah.
So this is as a personal development and what I've learned and things to do and not do. I learned. I was very lucky in my corporate career that I was in roles with good responsibility and learned a number of things and learned a number of things I did wrongly, but that's sort of been 10x doing what I'm doing now.
Yeah.
So I wish I'd done it earlier. I think there's things just going for it. There is me personally, maybe there's a bit of a fear of failure sometimes, maybe a bit too cautious. And again, I've had to crack that nut and just go for things. And sometimes it works, sometimes it doesn't. More times than not, it actually works. And what are you worried about? And you can always change things after.
Yeah.
But those are the thing. I've definitely started earlier, and I've just learned about there's nowhere to hide in what I'm doing. So it's all about getting things done.
Yeah.
And just doing it. And perfection's never going to happen. So keep going and just get it done.
I think that's the world of startups, right? It's you have to be ready to fail, but fail fast and fail forward is a saying I use, right? So learn from it, look at how we can put a solution in place and make sure we kind of move forward from there. But I mean, to evaluate on that then, so in terms of failures, what would say has been a failure that really resonates with you personally, and the biggest lesson that you think you've learned from that?
It's a difficult one this? I think a couple of times. So obviously one world new to me was fundraising.
Yeah.
Before you go to a finance director or CFO or someone and get a budget to do X, Y, or Z. Here you're talking about people's money. So and you have to have trust with your investors. And I'm saying 99 out of 100 that works, but I've had occasions where people have actually signed contracts. They've gone through the negotiation. They've signed the deal. The only thing they had to do was just send the money over.
Yeah.
And so you start pushing the green buttons on things that you had lined up for when the investment came, and that never happened. And that's sort of, like I was saying earlier, that's sort of 2001 time.
Yeah.
When I had to sort of put it on the back burner. It's because I spent a bit of time negotiating, trying to get things done. And then you put your trust in someone, and they've not repaid it back to you, but even worse, that it's impacted everything else that you've been building up and the momentum you've been building.
Yeah.
So I don't know what the actual learning is there, because hopefully I'd always be a trusting person, but yeah, maybe sometimes you need to do a bit more due diligence on people. But every other investor has been absolutely fantastic, and I cannot sing their praises high enough.
Yeah.
So
there's always going to be a few frogs out there somewhere. You got a few frogs to get to your princess, is it right? So no, I get it. It's an economic circumstance we find ourselves in now. The investment world is very tough as it is anyhow. So and look, there's a lot of big plans for you guys as a business. So I guess if you were to look to the future, I mean, what do you guys see as the next kind of big milestone that you're looking to reach?
Yeah, so like we're live in the UK now, and now it's just getting more and more e-com retailers to put our button on the checkout. But as I tell everyone, this isn't just a UK business. The tech that we built on the back end, partnerships with Shopify, BigCommerce, Mastercard, Monavate, PayPoint, allows us to go to other markets quite rapidly. So we're in discussions with some providers in the US, for example.
Okay.
So yeah, the next big milestone, well, there's two things. Obviously, we need to get the UK business, continue the momentum there.
Yep.
And at the same time, I want to demonstrate the business that we've built is scalable, and by doing that in another market, whether that's the US or not, I don't know, but these are the types of discussions that we're having. And I'm really, really excited by it, because the original plan we set out with a few years ago, it's deviated, but we're sort of focused in it, and it's reasonably on track, so to speak.
And I think if you speak to any founder of a business that says their plan is the same as what it was when they first writ it up on day one, they'd be lying. So I think having to adapt, overcome, evolve, all those kind of things is just part of that journey, right?
Absolutely.
As you know, this is a podcast called The People of Payments anyway, so always keen to get some insights to people around the trends in the market and what you see as the future of what's happening with this in this industry. So I guess if you were to fast forward 12, 24 months, give or take, what do you see as being the kind of big changes?
In 12, 24 months, I think. So bias, yes, was a Mastercard for many a year, but I think cards as a product and what they do, and how people are leveraging the schemes networks and innovating on it, I think that will continue, and I think that will you'll see new user propositions, not just account-based type ones, but B2B payments and things like that, which will go more and more on some form of card rails. I think things like open banking, obviously there's a lot of money being invested in that. It's great. I think there's quite a bit more work to do there on user experiences, especially if everyone wants to come to physical world. Like contactless is so amazing that I don't know how an open banking product at the moment can compete with that. And that's where even in my world of cash, that's where there's been that shift we spoke about earlier. So yeah, I see a lot of payments is very famous for making a lot of noise and lots of reports and lots of this and that. But it's not a 1 or 2 year plan in payments, that they take many a year. So I think cards and card infrastructure will remain king, and I think you'll see some cherry picking of certain transaction types, like buy now, pay later are arguably doing on some credit transactions online, and I think you'll see more sort of value propositions built along that. So yeah, let's wait and see. But
absolutely. Well,
spread yourself thinly if you're a betting man.
Say that again. Sorry.
Spread yourself thinly if you're a betting man.
There's just so much, right? And
it's not just products, it's relationships in market, it's regulator, governmental pressures. There's loads of sort of macroeconomic elements that do or die on payment solutions.
We've actually got another podcast coming up very soon, which I've called Andre, who's the EU policy lead over at 𝗬𝗚𝗧, and we're going to be diving into PSR1, PSD3, and all these types of things that's coming out in the regulatory perspective, which of course is going to make an impact in the market as it is. So lots to look forward to on that one. But look, for now, Piero, it's been a pleasure speaking with you, as it always is. In all honesty, really great guy. I wish you every success with Kasssh. And it sounds like you're on a really good journey with lots going on. So power to the elbow and best luck with the journey.
Will do. Thanks, Nathan. Take care.